Hello, everybody. Welcome to the live stream. Looking forward, as always, to our session today. Happy a few of us here so far. Hopefully, we'll get a few more coming in as we get things rolling. But I'm excited for the group that's here and for what we're going to be talking about today. As always, this is always an enjoyable session for me. I hope it is for you as well. All right. Really quickly, I just want to talk really quickly about a couple of different ways that you can interact with me and with the Rebel Income community. So bear with me just for a moment. Good morning, Jay. So glad you're here. There's a couple of different ways that you can do this, and a lot of it depends on the platform that you're using. Excuse me. I'm not going to recommend one over another. It's really about what you decide to use. First of all, if you are on Discord, you've got access to a lot of information, but the easiest way to interact with me here is in the open discussion forum. This is an area that I've created just for those of you on Discord who are on the Rebel Income Plus access. If you're in this live stream, then you have this access. You can go ahead and leave me a message here. You can also message the community. I've designed this as a way for everybody to be able to interact with each other and to discuss what's going on in the market, talk about current market conditions. If you have a question for me, you can certainly direct it here. You can also message me directly on Discord just by going up here to direct messages, and then you select from the different servers that you're on. For example, here I am connected to Traders Pro, so if I wanted to send a message to Jesse, I could do that directly here. So there's a couple of ways on Discord. If you are on Substack, then you can also do the same there. Give me just a moment. Using the chat function, you can just click on Rebel Income. This is another area that I've set up just for people who are on a paid Substack account. So if you are in this live stream and you are using Substack, then you have this access. You can go ahead and message me here as well. I pay attention to all of these channels, and try to respond to messages as soon as I can. You can always also email me at rebelincomesystem@gmail.com. I've put that email address in the chat area for this session, and so you can also send me messages there. I do tend to be more responsive on the Substack or on Discord, so you can choose the method that you prefer. But please do feel free to message me and to interact with the group. Want this to be a dynamic community where we're able to share ideas and collaborate. Okay. As always, this is Expiration Friday for weekly options. We're on the last Friday of March, starting to move into April. Can you believe it's already spring? The season is the year is just moving so fast. My grandson turns 1 this next month, and that kind of blows my mind. Okay. Personal notes aside, there's always a lot to talk about in the market, a lot of positions to consider, and so let's go ahead and dive in. Now, there's only a couple of positions that I have on deck that are scheduled for expiration today. So we'll start with those, take a look at some of the others, and probably have some time to talk about some stocks that you may be interested in. If you want to take a look, go through some analysis, answer some questions, or have me answer some questions, I guess. Then that'll be a good opportunity to do that. So let's go ahead and get straight to it. I actually marked one of these incorrectly. So there's 3 trades. Let's talk about the put sales first. Or no, that's correct. That was 321. That was last week. Okay, let's start talking about Barrick Gold. Sorry for for the lapse there. So this is a put sale that I placed at the beginning of this month. And in interest of full transparency, this is a stock that I've used in the past. I kind of like the idea of using precious metals to try to hedge against inflation and market uncertainty a little bit. And so I use stocks like Barrick Gold from time to time. And I've held an open position in Barrick Gold from a previous assignment of from a put sale for a number of months now. Uh, having been assigned at about $20.50. So this put sale at 17.50 is an opportunity to hopefully moderate and lower my overall average cost basis if I am assigned shares. Brought in on this. This was still a nice trade, even if you're just talking about it as a brand new trade for on a stock that you don't have shares in as I do. This was a 23-day trade, and I was able to bring in 1.77%. My normal target for these trades is, excuse me, my normal target for these trades is about 1.5% per month on average. And so this is well within that target. A little above it, which is nice. Let's go ahead and check in on Barrick Gold and see where things stand. All right, stock is at 1969. Grab my drawing tools here. I always try to remind myself to do this before the session, and then I never do. Okay, here we go. All right. So my put sale strike price is right here at 17.50. Clearly, the stock is above that. That means that this is a trade that is in very good position to expire worthless, and that's fine. This is what a lot of people may consider to be an ideal result. This is a good result for me. I'm not sure that I would call it ideal because I don't avoid assignments on these trades, and I was kind of looking for an assignment up to a certain point. All right, but in any case, with it up here at 1972, more than $2 away from my strike price, there is an opportunity to think about possibly buying this back. Now that's interesting. Here's the 17.50 strike price. Now the market's just getting started. We're only 8 minutes into the day's session, obviously. So a lot of these prices haven't really had an opportunity to sort themselves out yet. But 37-cent asking price on this one. This has probably not had an active trade in some time. Now there's plenty of open interest, which is interesting. And not too surprising because of the fact that these contracts are set to expire today. Open interest for a lot of these tends to increase on the day of expiration. But here's the last trade was a couple of days ago on the 26th, which is in part explains the odd asking price here. What does that mean? Well, again, the market is just getting started for the day, so we're kind of waiting to see prices kind of normalize a little bit here. If I wanted to buy this option back from the market, rather than waiting for the option to expire and just holding it through the end of today's session, the advantage there is that the capital that I put into the trade, this was a trade that I sold 3 contracts on, and that would excuse me, that means there's a position size on this position of about $5,000, $5,100, excuse me. Now I need to go check my math, sorry. 1750 times 3, 5,250. So times 100. So 5,250 is the total position size here. That's the amount of cash that I have in reserve on the account to secure the 3 contracts that I've sold. If I don't want to let the option simply expire and go through a normal settlement period, which is 2 to 3 days, meaning my capital is going to be available Tuesday or Wednesday, then I could think about buying this back today. I don't want to buy it back for 37 cents, obviously, but there is enough open interest here, 548 contracts, that if you wanted to, you probably put in a 2-cent asking price. Actually, that'd have to go here. This would be a sell to close limit order if I were to do it. Now, if you're in this position, if you're working with this stock as well, this isn't necessarily a recommendation. I'm not saying what you should do. This is just something you could do. This would free up that $5,250 as soon as the trade fills. Given that the option is set to expire today, I could put in the asking price of 2 cents, buy to close limit, meaning that I don't want to buy for more than 2 cents, and then I just would need to wait for the market to come to me. Is that going to happen? Probably. And the reason I say probably is because there is plenty of open interest here. It will probably not happen immediately. There's even 153 contracts somewhere around the asking price, which is interesting. So the trade may not happen immediately. I may have to be a little bit patient, but there's still an excellent chance that this would fill before the market closes. That would free up the capital immediately, eliminate any possible obligation on this contract, and allow me to decide what I wanted to do next with the same $5,250. In terms of possibilities here, let me shorten up my number of strikes a little bit. There we go. In terms of what the options may be here, the stock is starting to push up close to 20. So 1 week at 1950, staying out of the money doesn't look awesome. Again, some of these just haven't even gotten started yet today. So need to see how these would start to normalize a little bit. Hasn't been enough activity in them to this point. This one might not be too bad. This is about 3 weeks out, 20 days. And we have 43 cents on the ask for the 1950 strike. Value proposition for Barrick Gold is really, really nice. Fundamentals on this, as always, are still really solid. And so if you're not in the same position I am, where you're already in at a higher price, and you simply like the idea of continuing to work with Barrick Gold, this isn't a recommendation to buy or sell. As always, I'm going to keep my coward's door swinging, but this is an interesting trade all by itself. And so this might be worth considering. This is a little less than 3 weeks to expiration at 43 cents. That means you're getting a little over 2% for that period for a 20-day period. If you want to think about this in terms of annualized returns, and by the way, if anybody else is in this stock or any of the other stocks we talk about here, feel free to share your numbers with me and let's compare notes. And if you've done better than I have, I like to call that out and give you some kudos. So, in any case, here, oh, it's already changed 45 cents just while I've been rambling. So divide that by 1950. Oops. There we go. 2.3%. Jay, you were in it, but you already took the profit. So you already closed it out, which is awesome. Good job, Jay. I like the be nimble approach. Already closed it out, took profit, moved on to the next one. That's nice. I like that. This is interesting though. 2.3% for 20 days. We've got a holiday coming up 2 Fridays from now, so the market's going to be closed, which means that expiration Friday becomes expiration Thursday, and so that means that 365 divided by 20, still 3 weeks, means possibly 18 trades that you could place per year. Trying to show what 2.3% done repeated every 3 weeks kind of looks like on an annualized basis. If I can do 2.3% every 18, or excuse me, every 3 weeks for 18 trades, then that translates to about 41.4% on an annualized basis. This is one of the reasons why I talk so much about the low-hanging fruit of the market, why I love selling options as opposed to trying to buy options and hope for big moves to the upside. These are real great opportunities to just take advantage of money that the market isn't paying attention to, taking the sell side rather than the buy side, and putting probabilities more in my favor by time and hopefully price, as we've seen in the case of Barrick Gold. And I'm doing this on stocks that I'm willing to own anyway. This is kind of taking a page out of the methods of guys like Warren Buffett, Benjamin Graham, where I'm trying to set a price that I would like to buy this stock at. That's one of the reasons in my posts when I post a trade alert, you see me try to make very, very clear that if the stock drops below the strike price that I've sold, I'm okay being assigned. I would like to own that stock at that price. So 1750 when I place this trade, great price for Barrick Gold. And 1950 is still not terrible either. So that's an interesting trade. All right. So that's Barrick. Anybody else wants to compare notes, feel free. Let's go ahead and move on to the next one. And that is a put sale from last week. Excuse me just a second. Apologize, my throat was getting a little bit dry. This is a put sale on Suncor SU. This is a Canadian energy stock, and so an interesting kind of play on the energy sector, with a little bit of a play on north of the border. Now, I want to talk just for a second about some of the political uncertainty out there and the way that it's kind of affecting markets as we're seeing the effect of tariffs. Maybe not the effect, I should say, but the emotional impact of tariffs starting to play out in the markets. A lot of those haven't even seen the near term effect yet because we're not to April 2nd, which is the deadline that the Trump administration has set for a lot of these. But there's a lot of concern and fear about what is going to happen to the economy and consumer prices on a lot of levels. Energy is one of those, and energy imports from some of our trading partners like Canada, Mexico, are one of the things that come into focus a little bit when it comes to, is there some trade war risk where we're going to see costs increase as these countries are imposing retaliatory. They're doing the same thing that Trump is on a tit for tat basis, and then that accelerates the trade war. We saw that in 2018. It looks like we're going to see that play out again in a few different ways this year. So it's going to be interesting to see how that plays out in the long term. How much of this is going to be a matter of using a really big stick to force partners into negotiations or otherwise? Does that make Suncor a more risky trade? Maybe. I'm not going to dismiss that possibility. One of the reasons I decided and felt that I was comfortable with this, besides the fact that it expired before April 2nd, is also the fact that Suncor, number one, they're they're a great company. I've used this stock for some other trades in the last couple of years to really nice effect. So this is a company I really like. Tariffs or no. Number two, digging into some of their operations, a lot of their imports aren't directly. A lot of their imports don't go through the U.S. In fact, when they're, I should say exports. Excuse me, I'm getting the language reversed. When they export, it's usually through their own ports, through Vancouver, for example, on the west, or on the east coast. So they rarely you rarely see crude products running, energy products for Suncor running through the U.S. unless it's directly as a customer. Doesn't mean they're totally immune from that. We may see the stock experience some volatility as a result of whatever the market perceives, right? Sometimes, very often, I should say, the reality of the market is different than what the market perceives, or the reality of some of these stocks. So we'll see how this plays out. But this was a really nice trade. Taking advantage of some of that uncertainty meant that I think implied volatility was a little bit elevated for this stock when I placed this trade. Jay, you did a buy right, but you will be called out today. Okay, so you bought the stock, then sold a covered call, which is one of the alternatives that I like to include with my trade alerts. That was also a very nice looking trade, Jay. So if you decided to take that trade or some variation of it, feel free to share the numbers because I'd love to see them. You're going to be called out. That's also a really nice result. I sold the $37.50 strike price on this, brought in about 53 cents. That's a little under 1.5%. But remember, it's not 1.5% per trade that I'm looking for. It's 1.5% per month on average. And so with a 9-day trade, this was really short window of time. It expired before that April 2nd deadline started to come into play, and still had the advantage of being a little bit inflated on premium. And just to kind of put that in perspective, again, 1.41% is the total yield that I brought in on this for 9 days of time. So if we think about that, that's the possibility or potential to work with up to 40 trades over the course of a year. 1.41% times 40. It's not bad. Excuse me. Felt a sudden need to sneeze, and I apologize for doing that into the microphone. Okay, Jay, bought at set 37.45, sold the call for 49. You sold the 38. Awesome. Jay, I love this trade. So it's the stock is at 38.54 right now. It is coming down just a little bit. We're seeing a little bit of a taper in the last 3 days, but still sitting at about 38.52. So this is still $1 above the strike price that I sold, and a little over 50 cents above the strike price that Jay sold. Now, it is possible, not to rain on Jay's parade or mine, it is possible the stock could still drop further back before. Yeah, exactly, Barry. Uh, Not to rain on anybody's parade, but it is still possible the stock could drop back enough that I could be assigned at 37.50. I am not going to discount that possibility, but as it looks right now, I'm going to agree with Jay. This is looking really, really nice. We're seeing, even though it's down from the open here, and again, we're only a half hour into the trading session so far, but we're seeing it stabilize really nicely right here around 38.50, which is right in line with the 200-day moving average. So it looks like we've got really good support here. Yeah, Jay's calculating 2.8% return, and I think that that's exactly right. I'm going to trust your math more than I trust my own. 2.8% total return. I mean, in literal terms here, I'm going to, sorry, let me switch here. Let's sum up Jay's trade here. Buy the stock, 37.45. Yep. Sell 3.28. Expiration 38 strike. Call. Right? And the premium you brought in, go ahead and let me know what that is. Called out profit. You baked in a nice little 50-cent gain there. Thank you very much. Bid price was 49 cents. So if you are called out, yeah, sorry, you are right. I did 50 and it was 55 cents is the total capital gain. So the total return called out is excuse me, $1.04. I can type. So $1.04 divided by that 37.45. And just so that you all see exactly what those real numbers are. Wow, there we go. All right, $1.04 divided by 37.45, 2.77%. You're rounding up just a little bit, Jay. That's okay. So 2.77%, and that is for 9 days. Again, let's annualize that to 40 trades. If you're able to do this again and again and again every 2 days. Now, this is a broad assumption here. We know that in many cases we're not going to be able to repeat exactly the same kind of trade every single 9 days, right? But if we're trying to put this in broad terms and trying to think about how this actually can translate over time, this is the simplest way to do it. 2.77% times 40 trades. If anybody has a problem with 111% per year, then maybe we're in the wrong. Maybe we're doing the wrong thing here. But I don't think we are. This is a pretty fantastic result, and this is something that I know that's a little bit hard to read. I apologize, but this is something that is a really, really nice result. And so, Jay, you get two kudo marks today, which is awesome. That's a nice trade. And Suncor, again, this is looking pretty nice. It's just kind of sitting right around that 38.50 mark right now, which is I'm okay with. So we'll see how this goes and how it ultimately translates by the end of the day, obviously. But this looks like it's in a pretty good position. Jay, I take your suggestions, but usually make them shorter trades. Love it. Increase your trading frequency, right? And work with even shorter time periods than I do. Love it. That's just one more way that you will probably, a lot of people in the group do better than I do because I am intentionally a little bit more cautious and more conservative. That's by design, so that hopefully the system is a little bit more straightforward if you're trying to follow me exactly. But also it's just what is easier in terms of trying to deal with all of the other things that I have to deal with in my own personal life and professionally. This helps me to maintain the blog in a easy to manage sense, and also still deal with the other things that I need to do. I love it when I see the different variations that members of our group do. Jay, I appreciate you sharing. You take my suggestions, but like to make them work with shorter time periods. That's wonderful. There's all kinds of different ways that you can apply the method, put selling, income generation. There's all kinds of different ways you can apply that method to the same stocks that I'm looking at, but in different ways. It may mean being a more active roller and possibly buying back and deciding what you're going to do there. It may mean some other variation, maybe just working with shorter expirations as Jay is. There's not really a right or wrong approach to this. So let's go to Suncor here really quickly and take a look at the options chain. Again, a little bit of an outsized asking price here. Plenty of open interest. 154 contracts right now. So this is just like with Barrick, excuse me. This is just like Barrick, where I could probably set an asking price here at about 2 cents. If I'm willing to be patient and let the market come to me, I'll probably get it. It's just probably not going to happen right away, but that would not be a terrible thing. Barry, one of my recent trades outside of here, bought CNA. Okay, we'll get to that one. That's one that is outside of our system, obviously, but give me just a minute, Barry, and we'll look at those numbers. I'm happy to check that out. It looks like a nice trade. Bought it outright for $49.78, brought in $46 on a regular dividend, $200 on a special dividend. Interesting. And sold it for a couple, about $1.50 profit. That's not bad. Okay. So here is Suncor again. $37.50 is the strike price that I originally sold. Boy. Again, I think that we're seeing implied volatility on these contracts is a little bit elevated because of that April 2nd deadline. And I think the market is responding to that a little bit. These are contracts that cross that deadline, meaning that the perception could be that there's a little bit more risk with some of these. But here's 1 week out, $38.50, 7 days. Again, not a recommendation to buy or sell, but there's 53 cents available at $38.50. It's not going to be quite, it just went to 54. That's not going to be quite 1.5%, but 1.4% for 7 days. Again, we just did the math on how it looks for a 9-day trade. So that's not terrible if you like Suncor at that price, assuming you buy back the current contract. 14 days, you can go to $38.50 and get 61 cents. So now you're talking about 1.5% a little bit for a little bit of extra time. 20 days, 61 cents at 38. You're making it a little bit more conservative, going out a little bit further in time, but giving it a little bit more room to work with. Some different interesting choices here if you wanted to continue to work with Suncor. I'm not sure exactly what I'm going to do, assuming I do the option here. It does expire worthless. If this is going to be one that I'm going to be ready to turn around and place another trade with right away, I may want to just watch the market a little bit and see how that settles out. But we'll see. We'll see what happens. Okay. Let's go ahead and Barry, I want to talk about your trade. CNA Financial. So this is a multi-line insurance company. It's actually a little bit below the price that you sold at, Barry. So maybe you got out of at the right time, right around the top here, right? That's not too bad. Stock is seeing a impressive little rally here over the last week or so. And you bought it back in this neighborhood. There's the $200 special dividend and 46 regular dividends. So they combined the two of them together into this one $2.46, which is really interesting. So you brought that in. Good to cancel to sell at 51.25 from the moment I bought it. So you already targeted the profit that you wanted, and that worked out, right? You brought in that, you captured the dividend. I'm assuming I'm gonna go out on a limb here a little bit, Barry. You bought the stock when you saw the announcement for the combined dividends, and decided to buy it before the X date, which was the 24th. If I'm barking up the right tree, let me know. But let's run through Barry's numbers here, because this is pretty astute. I like this a lot. Bought Yep, I'm right. At 49.78. This is the advantage of paying attention to the news about the stocks that are in your watch list. Now, to be completely fair and transparent, I don't have a lot of perspective on this particular company. The trade is very impressive. I haven't done any analysis on CNA, so I can't speak to fundamental strength, weakness. I'm going to assume because Barry likes it, it's probably a good stock. I just haven't done any analysis on it. It's not on my watch list, but it might be now. So he bought it at 49.78, and thank you, Jerry. Thank you, Barry, for bringing it to my attention. I do appreciate it. 49.78 brought in that $246. So I'm just going to say dividends, $2.46, sold at 51.25. Net profit is the 246 plus, and because I don't trust my own math, let's go here. $51.25 minus 49.78, $1.47 plus 246 is 393. So that's pretty awesome. Everything is awesome in its own way. Sorry, I know that's the Lego movie. All right, $3.93 is the total net gain here, Barry, for a trade from February 18th. So this is a little over a month. So we take that $3.93, divide that by 49.78, which was your purchase price. Let me switch again over to my calculator. $7.89%. I just really like what you did here, Barry. Oops, not 4. 7.89% for about 40 days. And that's a guesstimate. That's 40 days, a little over a month. But think about it. Think if you could do this, whether it's in CNA or something else, if you could generate almost 8% every 40 days, right? $365 divided by 40. So that's 9 trades per year. 9 times 7.89. 71% on an annualized basis. I mean, this is just by paying attention and realizing that there was an opportunity there to be had. I mean, yeah, wow. Really, really nice. And this is just this is exactly the kind of example that I love, because there's these kinds of trades, these kinds of opportunities are out there. Not necessarily something like this one is available all the time, but sometimes they are. There's a good question. Thank you, Jay. Does anybody use Fidelity ATP? I don't use that one myself, but if you have an opinion about it, feel free to share it. Okay. Barry, similar thing for PPC, has a $6.30 special dividend. That's it. That sounds impressive, and it is for a stock that's at $53. Okay, so I'm going to put this in green, really big text. I'm not going to say that this is what you should do, folks. Not a recommendation to buy or sell. I'm not gonna do that. But check this out. For those who have ears to hear, I guess, is what we will say, and eyes to see. Dividend that is scheduled for $6 for payment on the 17th of April, $6.30. This is a stock that does not normally pay a dividend, Pilgrim's Pride. You're going to pay a $6.30 special dividend, and here's the X date. All you need to do is be a shareholder of record by the 3rd of April, before the 3rd of April. On the 3rd of April, they're going to gather a list of all of the registered shareholders of this stock. Yes, exactly, Barry. This company does not pay regular dividends, so I'm familiar with this one, but I haven't. I've not used this one for any of my regular income trades because they don't pay a dividend. I'm familiar with them because my wife likes to buy Pilgrim Pride chicken. But all you have to do is own the shares to get this $6.30 dividend. So if you only have 100 shares, you're going to get $630 for that. Now, you do have to be willing to accept the risk that the stock could drop after you've bought it. But let's say you bought it at the stock's current price, $53.51. $6.30 divided by 53. Fine, I'll just take 60 since that's what it's at now. That's almost 12% just for the dividend. This is not a signal that they're going to continue to pay dividends. This is just, all this is saying is they're announcing a special dividend at this time. So take that for whatever you think it's worth. Just saying, I like to talk about low-hanging fruit. Here you go. Okay. Thank you, Barry. On behalf of myself, on behalf of everybody in the Rebel Income community, thank you for sharing your attentiveness. Barry, it took a while to recover, or it will take, I should say. I also bought a put for $417.25. So hopefully when the price drops, the put will pay out some. So that is a fair comment. One thing that is very likely to happen here is that the stock is going to drop a proportionate amount. And it's not a given when stocks pay ordinary dividends. The logic is that the price is going to drop on the day of the dividend. Sometimes that happens, sometimes it doesn't. It just depends on market activity. They're going to be paying out $6.30. So wherever the stock is, say it's at 53.60 on April 17th, it will not be a surprise to see the stock somewhere around 47. So Barry's taken another approach, which is to buy a put that expires on the 17th as well. Not saying this is what you should do, but you're trying to hedge some of that down, some of that price drop risk, right? I'm not sure that it's going to drop the entire amount of the dividend. Again, that's going to depend on market activity. So we'll see. It's possible it could. Possible it could drop more, but the stock will in all likelihood drop, considering the size and the fact that it's a special dividend. I think that's going to have a more dramatic impact than a regular dividend would. So, thank you for pointing that out, Barry. I appreciate it. Okay. Let's go ahead and circle back here. And so we've talked about all of the trades that are on deck for expiration today. There are a few others that are coming up in the next couple of weeks. I don't have anything else until the 17th of April. So let's go ahead and check in on those. The first here is a covered call on Halliburton after being assigned at 26. I was assigned here on the 7th and had an opportunity on the 12th to turn around and sell a covered call at exactly the same price I bought it at, but brought in a little over 2.5% for about 36 days, which is why that outsized yield is why I was willing to sell the same strike price that I bought the stock at. And right now it's sitting at 25.22, so it's a little bit below that. Again, this still has a few weeks to expiration, so we'll see if this plays out. If this upward trend is going to hold, I'll change my color here. If this is going to hold, it looks like the stock could be starting to approach support. So if we see it rally back up here, then I could still get called out. But again, this has got a few weeks to expiration, so we'll see how this one plays. But this is just a way to pay myself a dividend after just missing this one by about a week. This is why I like taking assignments, is the opportunity to turn around with those covered calls. Barry, you only put $70 in that put option in case it doesn't work out. Cheap insurance policy, if it works, that's great. It'll work out nicely for you if it does. If it doesn't, then that makes sense. Okay. So that's Halliburton. Covered call on that one. And we have a put sale on FCX. That was this week's put sale. This is taking a page from Barrick Gold. To be honest, this is another stock in precious metals and mining that I kind of like. And this one is set for expiry on the 17th. Now, the interesting thing about this is that it is going ex-dividend a couple of days before. So if you're paying attention, like Barry maybe, the buy right on this, buying the stock and then selling a covered call might have made a little bit more sense, because you'd be a shareholder of record before the X date of April 15th. The option expires on the 17th. Then you would qualify for that dividend. But Jay, there you go. Paying attention. Perfect. Okay. Barry did as well. Jay and Barry, that's awesome. I'm reading your minds, which is great. This is just an example of recognizing when that opportunity is there and being ready to take advantage of it. That's great. I sold the put option on this, so I am not going to get this dividend. Again, I'm going with the simplified version of my system in every case. I'm presenting the other alternatives to you so that you can decide what makes more sense. But having sold $40 strike price right now, it does. Again, we've still got a little bit of time to expiration, but it is a little bit below that price right now. So it does look like I could get a sign where you see it picking up some bearish momentum here. I do expect to see a little bit of support here in the probably 38.50 level from the 20-day moving average. So we'll see if this can start to maybe consolidate a little bit between 38.50 and maybe top end resistance here around the 200-day moving average. If that can start to consolidate a little bit, that'll also be very, very fun, very useful. So we'll see. This is another really good company, though. One of the larger mining companies in the U.S. Barry sold the $41 put for 82 cents. So you're a little bit further out of the money than I am. Brought in 82 cents for that, which is not too far off from me. I did only a little bit better by selling the 40. Going to bring in 86 cents. So I'm going to go ahead and give myself a rally mark, but it's just going to be a little one. 22 days on this one. We'll see where this lands. So we're still a little bit of ways from expiration on this one. The other trade is a covered call on Skyworks. I was assigned shares of this one at 67.50 last Friday. Yeah, Barry, when you made the trade, it was well above the reference price you had in the I had in the recommendation. Bought at 41.76, sold for $1.17. Nice. Thank you, Jay. A little bit underwater in terms of the stock position, right? But that's a nice premium. Again, taking advantage of some high implied volatility there, right? Divide by 41.76, 2.8% for about 3 weeks. Again, these are nice results. I like these. Jay did nicely. So yeah, just keep it rolling. Yeah, Barry, if I would have waited a day or so, would have gone lower. This is one of the interesting things that happens sometimes. I intentionally don't place any of my trades until the day after I send out the trade alert. So I'll send it on Tuesday, look for the trade on Wednesday. The stock was a little bit lower. So that was one of the things where I ended up being able to go a little bit lower, making a little bit of an adjustment versus what I had highlighted and what was planned, where the stock was at when the alert went out. Skyworks was a stock that I was assigned at 67.50, but was seeing some nice. Jay, I never get around to it until Wednesday anyway. So you're working it like I am, Jay, which is awesome. Skyworks showing some nice momentum the early part of the week. Right here, it's going up. It's faded back since then, as the market is not really loving tech stocks right now. So it's at 65.12, and I'm in at 67.50. Now it could still rally. Still got about 3 weeks here, so still plenty of time to let this sort itself out. is starting to approach what I expect to be solid support, because it's provided good support here around 64 on a couple of occasions. But I sold the $70 strike, which is right up in this neighborhood. So it's got to cross above that in order to call me out of my shares. But I brought in about 2.15% for another 22-day trade. So, Jay, you already took profit on the put, bought it back. Awesome. That's great. Different variations on a theme, and being nimble when you have an opportunity to take advantage of a positive price movement in your favor is a very, very nice thing. So congratulations. I love it. That's great. All right. So that pretty much wraps up all the positions that I have. Got a chance to look at a couple of other stocks that Barry shared with us. Jay sold for $1.23, bought it back for 10. Means you kept $1.13. That's nice. I like that. I think that's a full 5 rally marks that you got. 7 days. Yeah. Gosh darn it. That's just frustrating. Love it. All right. Well, we are at time, but I do appreciate everybody being here and for your participation. It's definitely helped to liven up the session today. Thank you so much for your time. I do appreciate it. And thanks for working with me on a new earlier time. Hopefully we'll get some more people in the group coming in as we keep things moving. But in the meantime, hope you have a wonderful weekend. Enjoy hopefully it's a nice spring weather here in Utah. Hope it is in where you are as well. You get an opportunity to enjoy a nice weekend. If there's anything that comes up between now and next Friday, please don't hesitate to let me know. Otherwise, we'll talk again then. Thanks again, everybody. Have a great week.